Yeah. Hi guys. I hope the audio is coming fine and everything is audible. Right. So that's perfect. There's a slight delay in the chats coming in. Right. So today, yeah. So today we have my close friend Pranay. So right now he's working in Bain and Company, which is an investment bank, and he's a senior financial analyst. Right. So he's one of the youngest people to have a charter holder in FRM, and he started investing at a young age of around 14. So he's investing both in stock market as well as crypto market. So today is our first session where we'll be discussing more about stock market, and very soon we will be the very next session, which we'll be having next week, will be about the crypto markets, right? So in this particular session we'll be having more discussion on the markets, the current valuation of the markets, and what we actually it can expect from the market moving ahead. So since he's an investment banker working at the top level, so he will be having a pretty good idea of what exactly are big people thinking, right? So first of all, I would like to welcome Pranay to the live stream.
Hi, Saketh. Good to be here.
Yeah, hi Pranay. Right. So before we actually move on to the live session, I would also like to quickly tell about a Quants League. So it's a live conference which is happening from 27th. So I am actually mentioning about this because it's one of the kind where people will be coming live and they'll be teaching how to do algo trade. So people can actually check out that as well, right? So now we won't be wasting a lot of time and we will be quickly moving on to the questions. So my first question would be, where are the markets headed, Pranay?
Okay. So the main reason I wanted to go live right now is I thought if someone else would come, they would say that the market may go up. They will give a diplomatic answer, right? Because no one wants to go wrong. Some will say it
Right,
is headed upwards. Some will say it is headed downwards, right?
right,
So in this session that we are going to have, I want to make sure that we do not give such a diplomatic answer wherein I say, okay, I will predict up or down. I'll give you my rationale behind what I'm thinking, and you
right,
take a call to yourself.
right,
So
right,
when Nifty was trading at 10,000 and it suddenly like COVID hit, it crashed to 7,500. When it
right,
crashed to 7,500 levels, at that
right,
time, when I told my friends, okay, let's buy in. So everyone was saying it is headed much lower. Okay, it is going to
right,
hit 5,000. When it started recovering, when it reached 10,000, people started saying, okay, this is way above the COVID levels, and now we are going to see a fall again. When it started going
right,
to 12,000, people started predicting, okay, this is way beyond, it is going to crash definitely. Then when it went to 14,000, people started predicting, okay, this is too much. Currently, it is near 18,000. And
right,
still, I hear people saying the markets are going to crash. My answer to this is if you look at last year US election, like US has, if US sneezes, the world catches cold. Last
right,
year,
right,
US had $1.5 trillion at their disposal. What do
right.
you think? Where will this liquidity go?
So
2020,
obvi-
there's no COVID, there's COVID, there's no jobs, there's no economy. Like there's not a lot of real assets that you can invest in. You cannot invest in
right,
gold. You can, if you want to look at safe haven, you can invest in. People do not have jobs, so they need an asset to invest in. And tell me an asset where you can invest apart from equities.
right. So looking at the current returns which is offered by other assets, like maybe if you see a bank FD or something like a gold which hasn't performed, so the most attractive asset class right now would be the markets. Right.
Definitely.
So, considering the rich valuation the market right now has, and also that the other assets aren't looking that attractive. So, do you think we are headed for a much bigger rally, and what we have seen is just a beginning?
I'll tell you. So
Yeah.
if I knew that the markets are headed upwards or down, I would be a millionaire by now.
Right.
Anyone who is saying that markets are going to go up tomorrow, they may have the research, everyone can predict. But the only thing is you have to take a bet and then you have to see it. What one bet I'm pretty sure of is in the short run, it may go up, it may go down. But like as crypto investors say, right, it is always headed to the moon. Similarly, stock
Right.
market, far more money has been lost trying to predict a crash than that what has been lost in the crash itself. So a lot of people are predicting that they will lose money, but they miss out on the opportunity when it starts going up. So rather than
That
focusing on this, I know it will still go up in the future.
That's a pretty nice thing. Like it's actually a proven thing that people have lost more money rather than waiting rather than actually investing and losing money during a crash. So this is one of the reasons why it's always good to stay invested. If not full, if you feel the market might be overvalued, maybe at least a part of it should be into exposure into equities. If I'm not wrong. So.
Definitely.
Next, the thing is, we do understand that the stock market has gone up and we have a lot of liquidity coming in the system and the markets have gone up and there is no other asset class which is attractive. But we have seen some insane rallies in penny stocks. So some stocks, we have almost seen a rally of 1,000, 2,000%. And these are companies which you haven't even heard of, right?
Yeah.
And today they're making news and headlines because they're shooting up so much. So what are your comments on this, and do you think this penny stock rally is sustainable?
Okay. So let's use just common sense for this. Okay.
Right.
When 2020 COVID situation occurred, what happened? People lost jobs. They do not have
Right.
money. Work from home started. Everyone has to work from home. They cannot go to the office. What will people do when they are at home? They have a lot of time at their disposal. Also, they cannot work. So they need to find a source of income to start.
Right.
The best and easiest option for them is just they can open a trading account in 2 hours. They can buy and they can sell. That's
Right.
the easiest option available for someone. So if you see in the last 4 5 months, there has been a rise of around 1.5 to 2 crore accounts in the last in the last 4 5 months, right? So
Right.
people new a lot of new accounts are starting in. My question to you is, okay, I'm not talking about Saketh. I'm talking about a new investor who has got no knowledge about stock market but still enters the stock market. If I give you 5,000 rupee, I tell you, okay, go buy two Reliance shares of 2,500 each, or buy 5,000 shares at 1 rupee each for a normal small company. Which one would you
Right.
prefer? It's obvious
So
that
as
people only prefer where they can buy everything in a large quantity, because the stock moving from 1 to 2 rupee, people see that it is just 1 rupee move, but they fail
right.
to
Right.
realize that this is 100% move, right? This is,
Right.
even though it's a
Right.
1 rupee move, it is still 100% move.
Right. Right.
My idea is this year when new investors are coming in, if they have that mindset that why do I invest in a big company rather than focus on a small company? So that
Right.
is how
Right.
any stocks are rallying, right? That's what I feel.
Right.
In future, if you predict that a lot of accounts will be opening that way, and their mindset would be to invest in companies that do not have any underlying business. If you look at HUL or ITC, they have underlying good business, right? Even
Right.
though you look at ITC or HUL, they haven't rallied as much as say Arcom, Reliance, or like small companies, right? Reliance
Yeah.
Communications or TTML as well. Yeah, so that is what my view is.
So actually, it's good that you mentioned about this because we recently made a reel on the same. So a person who's entering the market pretty new, and he actually ends up buying a lot of penny stocks. So rather than buying a good quality stocks, and a year later, so this is back in 2020, and a year later now, this person is not seeing any returns from his penny stock. That is all because I believe that people look everything in terms of numbers. So
Yeah.
they think, if I'm not wrong, they think if a stock is at 20,000, so it has already gone to 20,000. How much more can it go? So, but a 1 rupee stock can become 20,000, but a 20,000 stock, how much more it can go?
So
So,
everyone thinks that they want to make 5x, 10x money. But
yeah,
if you look at Asian Paints, Nestle, or very big companies, right? In the past few years, if you would have invested money in that, you would have doubled your money. The chances of small cap companies rallying, and media shows, right? Okay. What media will show, if you would have invested 1 lakh in such a company, it would have turned into 1 crore. What they
right.
do not show is if you would have invested 1 lakh in this company, it has turned to only 200 rupees. It has
Yeah,
only turned to
yeah,
300 rupees. No one shows that. Everyone
right,
shows if you would have invested, because people always want to sound positive, right? They don't want to sound negative.
Right. Right. So again, coming to one more point which we have is that so there will be a lot of economic data which keeps coming in, right? So we have this GDP growth, GDP per capita, and there will be a lot more statistical figures which we usually see in the news. So one thing which I recently read was about this GDP per capita, right? So recently, India's GDP per capita hit a mark of $2,000, right? And if we actually see across the globe, and any country that has hit a GDP per capita of $2,000 has seen an exceptional growth in the coming decade. So,
Yeah.
considering that we have just now hit a GDP per capita of 2000, do you think this decade belongs to India? So, India will stand out.
Okay. So first answer to the magic number, that $2,000. So do you think, if I ask you, do you think $2,000 earned by US in 1990 and two thousand
Right.
dollars earned by Indians in 2020 are equivalent? Okay.
Yeah, absolutely
The
not.
thing is,
Yeah,
I don't want you to focus on the number. I want you to focus on the reason for that number. Why people say that this mark can be a good thing. So it is not a benchmark as such. Okay. So let's say what happens when people's needs. If you look at $2,000, that is like around 1.5 lakh rupee. 80%
right,
of the Indian population has an income of less than 10,000 a month. Okay.
right,
So now what happens when their earning increases?
right.
They'll start focusing more on their wants rather than the needs. Right now, everyone focuses on buying
Then
clothes.
basic needs. Yeah,
People think that they're trying to fulfill their needs now. They'll
right,
start moving into a discretionary spending. That's how
right,
automobile sector and all these sectors will start earning more. In
right,
US,
right.
owning a car is a necessity, but in India, it is a luxury, right? So it's a
Correct.
want for people. But soon in future, when income starts rising, people will start focusing on spending more on discretionary thing rather than spending only on the needs. They'll have more money to
Right,
spend on the. That
right.
is what I think.
Yeah, so the thing is, it's also an interesting fact which I read that in the coming decade, so we see a lot of lower middle class people transitioning into middle class, and below income group people actually improving their standard of living and coming up. So looking at all of this, it's pretty like based on your answer as well as what the trends are looking at. So we can certainly say that India's coming 10 years is going to be really good.
Definitely, definitely. No one, like as Warren Buffett says, never bet against America. Saketh
Right.
or anyone in India, like everyone should say never bet against India, no matter what.
Right. So the thing is, we have so recently, we have seen a lot of new companies coming out with IPOs, right? Especially companies. So you have a lot of food delivery companies, payment companies coming out with IPOs. And if you see how they have grown in the past and the valuations at which they are getting listed, so it's absolutely insane, right?
Yeah,
Because some trade at 150, 200 multiples. So
yeah.
it is true that these companies have a lot of growth potential, but do you think a 200 multiplier for earnings is justified for these companies? And so it's pretty hard to say whether it's justified or not, but they are no longer small, they are pretty big right now. And do you think these these companies can actually justify these valuations?
Like first, I'll talk about like how investment banking works. Okay, so I'll give you an
Right,
analogy for this.
right,
Suppose I own an iPhone and I'm the only seller in India who sells iPhone.
right,
I usually sell my iPhone at 50,000 rupee because I consider that is the value for my iPhone, and that is how I sell each and every iPhone in India. Now I see everyone in the India, they want to own an iPhone.
right,
They are ready to pay me 70,000 for what is worth 50,000. What will
right,
I do?
right,
Try to sell it at 70,000. If
right,
there is a lot more demand selling, they are trying to pay 1 lakh for a 50,000 iPhone. I am ready to sell at 1 lakh. Because me as an investment banker, that is anyone in the world, like even if your business interest would be to someone who pays you, right? Similarly for me, if an investment banker is getting paid by the company who's going for an IPO, will they
right.
want their shareholders to lose money by selling it at a discount to the retail investors? That is
Yeah,
up to your interpretation. Okay, this is
Right.
bringing me in trouble, but that is what I'm telling you, that my incentive is when I make money for my shareholders, not the people who previously trusted me, who gave me money, rather than
Right.
giving it to someone who will buy in future. That is
Right.
with respect to IPO. Fun fact about IPO that I want to give you, like you talked about magic number $2,000.
Right.
I'll tell you about an IPO in 2007. Okay, on an average, every year in India, there are around 20 to 30 IPOs. All right.
Right.
In 2007, India had around 108, 110 IPOs. In
Okay.
2008, market crashed by 52%.
Okay.
Okay. In 2011, India had close to 70 IPOs. In
Okay.
2012, market crashed
Huh?
by 25%.
Okay.
In 2021, we have already had 50 IPOs. I am not
Right.
suggesting where the market is headed, it's going to crash or not. But
Right.
just think about when is the best time for investment bankers to sell the shares?
Right.
When is the
So
best time for the
obviously,
company to sell? When everything is rallying? People are
right.
ready to invest in whatever they get in. So
Right.
no one can predict when the crash is going to happen, if it's going to go down or not. But this is a magic number that I found insightful, wherein IPOs can give out such insights. Yeah.
Right. So that was a pretty interesting answer, also. Even though, so what we can make out of these answers is uh, a famous quote by Buffett is what I would like to quote: that price is what you pay and value is what you get. So right now, since everything around is positive and people are pretty optimistic, we see a lot of IPOs getting priced high and still getting oversubscription. And so this might not be their true fair value. So I would like to say it can be much higher or much lower, but not to take a stance, because again, valuation is more of an art rather than
Not
science.
a science, definitely.
Right. So the next question, which I would like to ask, is a debate which is happening from quite a while. So that is growth versus value. So
Okay.
now, given a chance, so what would you prefer and why? So we see stocks like ITC which offer great value, but the performance is not there. And then we see a few stocks which are insanely priced and they just keep growing every time.
Okay.
So
So when I started in like when I was 13 years old, when I started investing, at that time, I bought a share because it was available very cheaply. Okay, in terms
right,
of penny stocks. That's what every first investor does. They buy a penny stock. What I did next was I started reading fundamental analysis books. So I realized that value investing is like that is how Warren Buffett made money. A lot of people made money. So value investing is what? Buying a 100 rupee worth share at a 70 rupee.
right,
Definitely that is value. But the only thing is, when will the market find a correct value? That is the question, right?
right,
You think fair value is 100 rupee. The market may still think this company should be valued at 70 rupees itself. It should trade at that discount, no matter what.
right,
But if you look at growth stocks, like if you look at
right,
DMAR, if you look at any other company which is growing exponentially, you also factor in whether the growth is sustainable. Like if I look
right,
at a food delivery company which has come up with an IPO, they are having a 1 lakh crore market cap. They are trading
right.
at insane valuation of around 200 PE or 300 PE. Do you think they'll be able to grow at such an exponential rate? If they grow by 10 times, they'll have 10
Hmm.
lakh crore market capitalization.
Yeah, yeah,
10
yeah.
lakh crore market capitalization on a revenue of 20,000, do you think that is justified? So, like,
Right.
I'm not, whatever is the company,
Yeah. Huh,
that company
huh.
has already covered majority of the market in India.
Right.
To grow further, they'll have to penetrate further. But how do they penetrate further when they've already covered
Exactly.
most of the region? They
Exactly.
have to grow 10x from here or 100x
Yeah.
from here.
And so even if they grow 10x from here, and let's say they reach a sales revenue of around 20,000 crores, right? So I don't think that is good enough for the so that is good enough for the valuation to go 10x from there, because it would end up becoming the second or the third largest company in India.
But what I've realized is, like, this is totally my perspective. If you're buying a value stock, you have to be able to buy a 100 rupee thing at 70 rupees. But
Right.
for a growth stock, it's even though the value is 100, some people are ready to pay 150 to 200. Even I
Right.
can pay 200 for this.
Right.
It may also happen that this may go to 800 or 900, right? So
Right.
what I realize is growth stocks are much more favorable in terms of returns, in terms of value stock. I honestly, personally feel that value investing is dead.
Right. So that's what even we actually focus at Optionables. We actually look for growth, and like we have made certain investments in companies like Nestle, Pidilite, where people consider these to be extremely overvalued, but yet they have delivered pretty good returns for us. So that will bring to the next question which I have. So the argument which has been over decades is that whenever the stock has high P of maybe like 60 or 70, right? So that should be justified with good growth in the future, right? And otherwise, we see these valuations getting corrected. So now we have huge companies in India. For example, you can take Nestle, Pidilite, exceptional companies, and we own a lot of these shares. But we see these companies trading at a PE multiple of 100 as well as 80. But when you look at the bottom line or the top line is just growing around 7 8%, whereas the bottom line is growing around 15%. So, considering this, do you think these stocks or these companies are in for a correction in the valuation? Because I definitely agree with this that these premium franchises must be given higher valuation compared to otherwise other companies. But so do they
So,
actually justify a 100 P?
so if you look at big FMCG companies, they're trading at around 90, 100 P, right, in India. But
Right,
in US or global, like if you look at their global P, that would be around 30 to the 40, right? So when you compare 40 earning rate and 100 in India, Indian market seems expensive, right? There
right,
are 2 points that I would like to mention. First, if you look at Reliance Industries as such, okay, they have different businesses. They have oil business, they have telecom business. Do you think everyone performs similarly? It's obvious
definitely,
that some
yeah,
would perform better than some other companies, right?
yeah,
Global
definitely not.
markets have a lot of countries in it. India, considering the growth potential, there is a chance. Coming to a second justification, wherein we say that okay, the valuation can be higher. The reason for that is Indian markets are not matured enough with respect to US markets. So what happens when people start pouring money in a large cap mutual fund? People
Right,
start putting a lot of money in the large cap funds. What happens then? These large cap funds, they get thousands of crores in a day or in a month or so. They have money to invest. Where will they invest it? If
right.
they buy a
So
small company, they can directly buy 100% of the company, right? So they'll have to
right,
go for a bigger company. There are only
right,
few listed bigger companies like in Nifty 50, you will find Nestle. They'll have to invest in Nestle or they will have to invest in Reliance Industries because with the amount of capital they have, that's the only way their money can go in, right? So considering
right,
Indian markets are not that mature, these companies are trading at that valuation. And even if you talk about Nestle or any big companies, they have an economic mode. If you look at Nestle, they have monopoly in terms of Cerelac and the baby food products like they make. All these companies have an economic mode wherein if the price increases, people will still buy.
right,
Indigo, like if you look at Indigo, if the price decreases, there will be a lot of competition. If you go for any
right,
flight, you won't check
right,
you're buying airline from Indigo, SpiceJet, or that. First thing that you
right.
will check is price.
Correct.
You won't want to invest in a business which is very price competitive. You would want to invest
Right.
in a company which has an economic mode where they can decide the price for themselves.
Right, right. So the thing is, considering the same fact, do you think as the economy develops and the more money starts coming into India, so we can see these stocks? So the thing is, if you maybe see 10 years ago or 20 years ago, Pidilite was valued as a normal 20 30 PE stock. So, but right now we see the PE being around 80 90. So, do you think there is a chance for re-rating as Indian economy becomes more mature?
So, uh, if you look at researchers, right, investment
Hmm?
bankers, and everyone who gives like equity research analysts, their rating everything revolves around how the stock is performing. No one wants to be a villain, right? Everyone
Right,
wants to analyze where the situations are heading. So I don't want to name a particular company and say that this is headed down, this may recorrect. This answer would be a very diplomatic answer wherein I say some stocks would go up, some stocks would go down depending on how things pan out for them, right? So
right,
no one can consider what the future holds because no one knew in 2019 that we'll be hit by COVID in 2020. No one knows
right,
how the thing changes in next year. Yeah.
Right. So now that is a very good point which you made. So because these investment banks usually don't want to get it wrong, or they want to be on the side of the market. So the thing is, we have seen in the past. I will tell you from my personal experience, right? So I will just quote the example of Bajaj Finance itself. So there were many companies which came out with research reports having a target for Bajaj Finance at 4,500, 5,000 in 2019, when the sales and the profits were much higher than what it is today, and the economic prospects look much better than what it is today, because 2 years you have absolutely slowdown in the economy, and you have two wasted years where they could actually not see any exponential growth, right? So but the thing is, now these companies haven't even got back to their pre-COVID levels, and you are seeing the valuations or the target prices what these companies are giving is almost 2 times more. So back then they had 4,500. During the COVID crash, they reduced it to 2,000, and suddenly from 2,000 they jump all the way to almost close to 9,000. So do you think these companies, and they have pretty good reasons as to why they think it's at 9,000? So what do you think about these research reports? And I know it's a pretty controversial question because you work in an investment bank, and how far should these be trusted?
Okay. So my, like, people, all everyone who is on live today
Right.
or who will watch this video, if, like, let's assume they are owning Reliance shares. Okay. This Reliance share, can you hear me?
Yes, yes,
Yeah.
yes.
Yeah. So they have been owning Reliance shares, and Reliance share starts going up. It has given phenomenal return in past few years. If an analyst comes and says what you're holding, you should sell, it is going to fall. Will you consider him to be a hero or a villain? Right? Everyone
Yes.
wants to be play a safe game, right? No one wants to go against the trend. Everyone wants to be a momentum player. But that doesn't mean the research reports are useless. I'll tell you how. What I look for in a research report, there will be recommendations, buy, sell, neutral, whatever it is. It is up to you whether you want to trust it or not. But the research that goes for it, you need to look at that aspect. For example, if you own Infosys shares, you won't have an idea about how the company is working. You won't know the impact of how US can affect the company because you're a
Right.
doctor. You don't know how to go ahead, how to invest in it. At that situation, the first thing that people look for is these investment bankers or researchers or the equity analysts. Their role is directly contact the management, get in call with them, ask what all things
Right.
are happening with them, where is the
Right.
economy headed, what risk are there these companies facing. All these things are mentioned in the research report. So what I look for is the rationale behind why did they give that particular rating. If they're given the rating, if I agree to the rating and if I agree to the reason that they have mentioned, I'll go ahead and do what they're saying. If not, I take in the best from it. I consider it as a tool, not as a Bible. That's what I would
Right.
want everyone to know. That do not
Right.
consider it as a Bible, just consider it as a tool that can assist you in terms of your investing journey.
Right. So that's a pretty good answer, Pranay. So, like, I would also want to ask you a few impromptu questions, since I know you personally and I also know how knowledgeable you are. Right. So you're one of the youngest FRM charter holders as well. Right. So, what do you and you, since you work in a pretty good position in an investment bank, so what do you think about what we actually read in the finance theory and what is actually applied in the real world? So how much do you think that holds a correlation between?
So, from my perspective, like we
Huh?
often read about valuation theory that we look at high beta stocks, low beta stocks, try to manage our portfolio. But the good thing about this is this has been formed after a lot of experience. Okay, but what you need to look at is the research. What's the output? Just apply common sense for everything. Okay, books will say invest in an economically mode, like companies which have economic mode and all such high-fi words, finance
Right.
words on high-fi words, right? One year they'll come with real estate investment trust. Next year they will come with CDOs. Next year they'll come up with
Right.
NFT. Next year they'll come up with cryptocurrency. So what you
Right.
need to look at is just apply common sense for everything. Let's give you an
Right.
example. You get up in the morning. The first thing that you do is brush, right? You have been brushing from last 50 years. Everyone in the family. In the next 50 years, you know you will be using a brush. You will be using
Right.
Colgate, right? You won't stop
Right.
using Colgate. If you see the company is still going to exist in the future, then you realize, okay, what I've read is economic mode, but what I am currently seeing is I associate toothpaste, the Colgate with toothpaste rather than toothpaste with Colgate, right? So Colgate is
Right.
just a
Right.
brand. But what I say is, please pass me a Colgate. I want to buy Colgate rather than buying a
Yeah.
Pepsodent or whatever.
Yeah. Yeah.
So I say use the theoretical knowledge, take the whatever you learn from it, apply your common sense, and just go for your investment. Just use
Right.
like if there was a story behind it, there was a monkey was told to pick a few stocks, and there were few big people who were I cannot recall like those guys were told to pick a particular stock. Monkey was able to beat those
Yeah.
professionals who have
Yeah.
been able
Yeah.
to choose a particular stock after a lot of research.
Yeah.
So
And
the thing
if
is,
I'm not wrong,
you
they were the fund
and you
managers
have to
also.
hope that the divine future will. Yeah,
Right, right. So they were pretty big fund managers also who actually took this bet against the monkeys.
yeah, yeah.
Right. Since we are almost coming to the end of the stream, so this was a short 45-minute stream. I have last couple of more questions to go, and I also hope that everybody who is joining us live are having a great time. So you guys can also start shooting in your questions, and right after a couple of more questions, Pranay will be addressing the same. So you can do that right away, and we'll be quickly moving on to next question. Right. So Pranay, now I would, since we are having a separate session on cryptos and NFTs coming week, so
Yeah,
I won't be focusing more on that right now. But what I
definitely.
would like to ask is one more impromptu question. So, what is your view about gold?
Goal.
Yeah,
Yeah. So the point is, this is a typical, as I say personally, I feel more than silver, I am bullish on gold because if you look at a
right,
lot of investment banks and big banks, they are short on
right,
silver. Now
right.
imagine if silver starts going up, these
Hmm?
investment banks, all the big banks would start losing money. And do you think if these banks lose money, how will the economy survive? Because these are
Yeah,
pretty big banks and they have the position which are very huge. Okay.
right,
If you look at gold, I think gold is better placed than silver in my opinion. This may vary for person to person, but
right,
honestly, if I've given a chance, I would look with respect to my allocation, my perspective. Now people have started associating Bitcoin as the new gold, so no
right,
one knows
right,
what's going
right,
to happen in future. Gold has been in from the past few years. People still associate a value to it, right?
right,
So
right,
I don't think gold is a bad investment, but I think start investing based on your risk appetite and risk profile.
right. Finally, we come to the end of this with the last question, and then we'll be moving towards addressing the Q&A. We have a couple of questions coming in already. So my last question is, with so many things happening around and so many things being uncertain, so I have always been a bull on the market, and I always uh, tell people to invest no matter at what level Nifty is or what is happening. So you should have some exposure towards equity markets. But one thing what people fear is, with so many things uncertain in the market, right? How do you think the market will play out in the future? So, what, as an investment banker, what would you like to add so it adds more confidence into people to be financially invested?
Okay. So in 1920, Great Depression happened. Like people started losing job. Stock market crashed, again recovered. Then we had world wars. Stock market fell. We never knew we'll stay alive or not. Stock market still survived. It went up. Floods occurred, tsunami, whatever happened, markets are still there. Earthquake happened, COVID came, still markets are recovering. So no
Right,
matter where the markets, like whatever the uncertainty, if markets are not there, economy is not there, markets won't be there. So you
right,
won't be
right,
alive if the markets are not there, right? So I
right,
am always a big bull, like I am always a bull on this, bullish on where the markets are headed. In
right,
short term, it may go up or down, but in the long run, it is always going upwards. That is
right.
what my 2 cents on this is.
Okay, now we'll quickly move into taking the questions. So we have 10 more minutes left for the stream. And we have a few questions coming on specific stocks, which we won't be addressing, right? So one interesting question, what I see here is about, this is from Vamshi Krishna. So what do you think of current Nifty PE? So this would be a really good question, because so if you see the current PE of Nifty, it is at one of the highest it has ever seen, right? And usually we see 28, 29 PE, we see the market crashing, right? So now it is around 35, if I'm not wrong, almost close to 40 as well. So what do you think at the Nifty PE? What is your view about the same?
Like, honestly, what I feel is, in short term, markets are driven by liquidity. People have a lot of cash to invest because governments is just sponsoring. I'm not talking about the Indian government or the global. I'm just talking about
Mhm.
globally. There's a lot more liquidity because economy and stock market. Everyone says that if economy is booming, stock markets will also go up, right?
Right,
In the long term, if everything will correlate, but in the short term, if economy is growing, like if the businesses are flourishing, would you invest in stock market or would you invest in your business in the short run?
right,
So if the businesses are not doing well, that time, even that situation, stock markets can go up. Liquidity
exactly.
in the short term, and in the long term, the fundamentals drive it. So
Right.
that's what the answer is for it.
So next question we have is okay. That's again by Venkat Bangalore. So the thing is, one point which I would like to note here is about the dividend yielding stocks. So we see certain stocks which offer great dividends. So great dividend yields. For example, BPCL day before yesterday almost offered around 13% yield. Right.
Yeah,
So considering the current scenario of the market, so we have already seen Nifty rally so much, right? And the business also moving up. So at this point, so if the markets were undervalued, even my personal preference would be to go for a growth stock, right?
yeah,
So do you think having some amount invested in high dividend yield stocks at this point, because if someone is offering me a 12, 13% dividend, so
definitely.
from here, yeah, markets on an average might not grow so quickly, or might grow, I'm not sure. So
Yeah.
what would be your opinion on the same?
So my take for dividend yielding stock is, initially I invested a lot of money in value stocks. Okay. Then I started moving into growth stock because in the past few years I realized growth stocks have a higher chance for me to make money than, because being pretty young here, I can take a little higher risk than what I can take when I get older, right? If
Right,
people
right,
who have a higher risk appetite, like, so they can go for growth stocks and low dividend yielding stocks. When do companies give dividend? They'll only start giving dividend when they see that if they would invest in their own business, they won't get that much return. So it's much better and
right,
advisable to give it to the shareholders. That's when
right,
companies start giving dividend. So
right,
big companies who see that, like if you look at ITC, right, it is a cash cow. Okay. No matter if the economy goes up or goes down, people will start drinking cigarettes. They'll have cigarettes. They'll not
yeah,
stop smoking, right? If
yeah,
in case of depression, they'll still have it. If the economy goes up, people still want to buy it, right? So
right,
these companies which have a economic, like, pretty good future in, that they'll still be earning no matter what, those companies, like if you look at IDC as well, it has been trading from 150, it went up to 200. Now it has been constant. There are a lot of memes going on with respect to
right,
IDC. It
right,
doesn't cross 230, 240 levels. But if you look at FDs also, FDs give you about 4 and 5%, right?
right, right,
And your inflation in India is around 6%, 7%. It
right,
goes right. With more money being printed, inflation would definitely rise further. So
right,
right
right,
now, if you are looking at FD, I personally don't prefer FD. My view is always go for equity stocks. Equity, definitely. In terms of equity, analyze according to your risk profile. If you do not want to risk more, go for a larger companies with stable dividend, which do not give dividend like on a occasional basis. Regularly, they have been paying dividend. Go for that. You do not have to worry a lot about your company. It's just like your FD return that you're getting in terms of dividend.
right. Yeah, guys. Before continuing, you can also follow Pranay on his social media handles, and the same has been attached in the description. So do check that out and follow him as well. Right. So next, one more thing which I would like to point out is since Pranay is more into investing, so if the questions are more of investing, it would be better than having trading questions. Or if Pranay is happy to address the same, we would also be great. It would be great for us as well.
So
So yeah,
with respect to trading and investment, okay.
yeah,
So I like cricket, like with RCB is winning. People, everyone is talking about cricket right now. So
Yeah.
let's analyze cricket, stock market in terms of cricket. So I personally feel T20 is what is trading, right? So
Yeah.
you need to adapt pretty quickly, right?
Right.
And whatever ball comes, you will have to adjust pretty quickly. If you start playing dot balls, that is negative returns in trading, you will soon be out of the team, right? But if you look
Right.
at investing, it is a long term thing. It's like a test match. Your
Right.
role
Right.
is to hang in there and wait
Right.
for a situation when you start scoring runs, and that's what happens in future. So personally, I prefer test, wherein I want to hang in there, wait for the right moment, rather than trading every time and losing money. Even you would
Right.
have seen, like, as in optionables, you earn more money by selling options which are hedged and
Right.
than by buying options, right? Because
Right.
you know the probability of big people making money is higher than the small retailers, because the trades are arranged against them, right? The probability of them
Right.
earning is much higher.
Right. Right. So one more question what we have is from Rahul Shetty. So he's asking that I have a dream of becoming an investment banker, and what is the scope of investment banking? Okay, let's talk about India in specific. So since you're a investment
Yeah.
banker, and
So
yeah,
so I'll like a lot of people in India confuse investment banking with equity investment. Okay. So I'll just give you a scenario. Suppose Google comes in India and they say, okay, I want in India everyone drinks tea. So let's acquire a
right,
tea company that makes tea. Okay. If they're selling chai, I want to buy that company. So they'll approach an investment bank and they'll say, hey, ABC, I want to buy this company, search for it. What these investment bankers would do is look out for these companies. They'll create few profiles based on which company they find suitable. They'll send this in a presentation pitch book, we call it. They'll send it to the management team. They'll analyze, okay, this is good, let's invest, let's focus on, let's give us more data about this particular company.
right,
What investment bankers would do next is research more about these companies, and ultimately they'll say, "Ki, okay, this is how this company looks, this is how the industry is positioned, this is how the competitors are placed, this is how much we think this should be valued." There are various analysis to it: past analysis, present analysis, and future. That is
right,
discounted cash flow, you use comparable comparing, precedent transaction, a lot of valuation methods. But this is how investment bankers help people to take decision in terms of IPOs. They help in mergers and acquisition. So investment banking is the highest paid job in the world. Okay, you'll get
right,
a lot of money if you're working in investment bank. Okay, the drawback of working in investment bank, let's be honest, is the time that you will have to devote. If you are confident and if you're comfortable that you can devote around 50 to 60 hours in a week, that is on an average. You will have to spend 13, 14 hours a day on a usual day. You won't have a weekend as such. You will have holiday on Sunday. That too, you may be called urgently if there's a meeting on Monday. So
right,
you will not have time wise attention, but you would never be under compensated in terms of money. You'll have to devote a
right,
lot of time, but you will get
right,
a lot of money.
right. So the next question I have is Pranay. So I just want to know your personal view regarding the same. So let's say a new investor is starting off. So we have three things what we can do, right? One, he himself picks the stock. Second one is he invests in ETF, and third one he can build portfolios using something like a small case or something like that, a pre-made portfolio. And fourth one, obviously, he can put in mutual funds. So he has four different options how he can move forward. So what would be your preference here?
So let's talk about a doctor. Okay,
Hmm.
doctor has, if someone who is not into equity market, they want to start investing in stock market. For them, the best option for them is go for a mutual fund. Okay, people, because now the complication arises with respect to mutual fund, whether should we go for a large cap, small cap, or a mid cap, which they do not have any idea about. At that
Right,
situation, what I recommend people, like even you would have recommended this, is let's buy a Nifty index, because almost
right,
70 to 80% of the portfolio mutual funds have not
yeah,
been
right,
able to beat the index itself.
right,
So why
right,
do you want to complicate things? Just go for the index, and at the
right,
end, you do not have to worry about it. If index goes up, you will earn money. You
right,
don't have to
right,
be worried about different things.
right,
Small case scenario, lot of, every theme, like small case is based on various themes, right? you want to focus on investments,
Yeah, yeah,
focus on
yeah.
dividend, focusing on renewables. So I don't want to comment about a particular company or their aspect as such, but they are again providing you diversification in terms of what you cannot obtain directly, right? So if you want to
Right,
buy MRF share, you cannot go and invest 30, 40,000, right? You want to invest in tire companies, you are bullish about this. If I am bullish about electric vehicles, so small case
right.
has a small case on
Theme.
electric vehicles. I can
Yeah,
go ahead and invest in that. My
right,
investment wouldn't be in crores or lakhs, but I can still be a part of that. So they
right.
are they are doing a lot of research. So it just depends on how much they are able to outperform the current scenario.
Yeah, that's great, Pranay. And since we have almost hit 45 minutes, I'll be asking you the last question and we'll be wrapping up things with that. So, I want to know like how much AI as well as algo trading has been influencing the investment bank in terms of making their decisions. So, for example, will it be completely on the basis of the fund manager's perspective? Or let's say they want to make an investment decision and algorithm based on whatever the presets have been set. So it says this is currently a good investment to be made.
Yeah. So if you look at the flash situation that happened few days back in Nifty,
Hmm?
the options that call option went from 20 50 rupees to 900 rupees, right, in a matter of few seconds. So
Right.
what do you think would have happened? Stop
Algos
losses
would
being
have
built
hit.
continuously or
Yeah.
algo trading in, right? There are a lot of
Yeah.
positions being built. So you would know the chances of error with respect to manual entries, because if I want to buy, if I do not pay attention, if by mistake I hit a sell button, I can lose a lot
Right.
of money. But if
Right.
I can automate it as much as possible, there will still be a supervision no matter what. But if
Right.
I can automate things, why will I not? Because you will take some time to analyze things, but robot can analyze it within few seconds. They won't even spend few minutes also for that.
Right. Right.
So they'll still have an edge over other people. These people are
Right.
still investing a lot of things on these resources, and ultimately, whatever happens is based on their research and analytics.
Right. So, like, my question was more specific to investments because you see certain funds using the mean reversion strategies, right? Whereas certain funds where they purely invest on fundamentals based on the fund manager's perspective. So, in with that respect with that aspect, where do you think or how much do you think the algos have started dominating the
No,
investment
no doubt
management
about it.
decision?
Algos have
Yeah. Yeah.
obviously, even if I talk about optionables, they would be using option algorithmic trading in future, right?
Right.
Everyone has understood the advantage of trading via algos, right? No one wants
Right.
to miss out on like I'll just talk about a scenario in crypto, right? Dogecoin, everyone would have heard about Dogecoin. Dogecoin moves when Elon Musk tweets. So people
Right.
created an algorithm wherein as soon as Elon Musk tweets, the algo analyzes if Elon Musk is telling something positive or negative about it,
Okay.
and
Okay.
they take a trade in a matter of few seconds, right? If you are an investor, if you do not have any access to the algorithmic trading, what will you do? You'll have to go to Twitter, you'll have to read about
Right.
it, analyze it, and then you may even miss out the tweet, right? He may tweet at 2 a.m. or 3 a.m. You'll
Yeah.
miss out on
Yeah.
that thing.
Yeah.
But algorithms are feeded in such a way that they can do it. There will be lot of errors wherein if
Right.
we say something, people would interpret something, but that's how improvements would come in and algorithm trading would be improved in future.
Yeah. And that's great, Pranay. So since we have almost touched 50 minutes and it's also time for us to wrap up this session, and it has been really great having you on this live stream, and obviously we'll be continuing this next week also on the topic of cryptos as well as NFT. So I'm pretty sure that even the audience will be excited to know about the same because there's a lot of doubts or
Definitely.
questions which people have. What exactly are these cryptos? How do you start? Or what exactly are these NFTs? Right.
Yeah.
So we will be joining in soon next week, where we'll be discussing more on cryptos as well as NFTs. So that's for today's video, guys. And one more thing is, like since we spoke a lot about algo trading, so you can definitely check out Quants League as well. So they have a live algo trading session happening from 27th. So do check out that as well. So with that, we also come to the end of this Q&A session with Pranay. So you can also follow Pranay on his Instagram handle as well as YouTube. The link has been put in the description below. Thank you so much for joining, Pranay.
Thank you so much, Saketh.
Yeah. See you soon.
See you soon.